this year in the United States, over 600,000 401k plans and over 60 million participants are going to get their first income disclosures. My view is it's going to wake up a lot of people to, where do I get income? So I think for yourself, you need to, as you have your plan, an individual or a household has its plan on what its retirement plan is, what income they're looking to generate in retirement, the quality of the retirement, all the aspects of retirement that they're going to have, income, how they're going to manage their expenses, and so on. You got to keep on top of that.
Hey everyone, welcome to 2022. I am here in the studio with Harry Stout, and we are in a series which we're going to call Intentional Money Matters. Harry Stout, thank you, number one, for just being on the show, having sessions with me. I know that you're very, very big into financial literacy. You're very well written. You have your own podcast, and I'm just really grateful for this time. Any special concepts that you have going into 2022 personally before we jump into the money world?
Well, no, I just think, personally, I just trying to get better, Caleb. You just try to get better at what you do. And I'm looking for ways to better communicate knowledge to help people improve their lives. And it's really interesting. Some days I wake up and I think I'm selling financial broccoli for people. It's like, it's financial broccoli. Other days you find an audience that's very receptive to what you're saying, and they really want to make improvements in their life, and you can give them some ideas that will help them. So all I'm trying to do is find new ways to communicate. I think a session like this, fast-paced, will give them ideas and thoughts, and hopefully they can improve their habits, which are the key.
And you have six habits that we want to go through, or just 6 money ideas that we can talk about. The one thing I want to say is the month of January, I think, is the best month to get people interested, because this is the month where everyone's going to the gym. People are really analyzing and saying, this is a new beginning. What do I want my life to look like? And if you look at the top, commitments people make, it's usually around health, around communication, around money. And you could make the argument that money is maybe not the most important thing, but it's tied to almost every important life decision, habit, and result in your life. And so with that, what is the first idea that you want to bring as it relates to intentional money matters?
I think you really, here we are in January, you need to prepare for filing your tax returns in April. And I think that's important, because if you do the returns yourself, if you use one of the software products and you do that yourself, a lot of people do, or if you use a professional tax preparer, either way, you're going to have to gather information to either complete the program or fulfill the information request from the tax professional. And if you don't take some time and some thought to do it, you'll miss things.
Yeah.
And give you a great example. One thing that I used to be a tax preparer. I used to do tax preparation at a point in time, and just helping people better organize their records. Because back in the old days, I used to have clients, and I'm serious, that would come in with the proverbial shoebox and say, here, straighten it out for me, because I don't have any time for this. And other people over the years who got better and more organized. So if you can organize yourself, you know what your contributions are, you know what your mortgage interest is on your home, you know what medical costs or medical bills you've had during the course of that year, so that you can present that to the preparer or to the software program to get the best possible answer in terms of taxes paid for you and your household.
Do you have any example of like some of the biggest mistakes people make because they're rushed? Like, is it they don't get all the deductions properly, or they don't properly get the right paperwork? Is there any like common mistake that people make because they're not proactive?
Well, I just think you miss things. I think, typically income, you're unless you are a business or a proprietor, I mean, you've got work to do there to make sure you have everything, but usually you're going to miss deductions.
Yeah.
And and there are things there that you should have in mind and keep and present. You may also, if you do this properly, you may also give the tax preparer or the service, if you will, some ideas on things you might want to do to improve your tax situation before you file your return. Maybe it's an IRA contribution. Maybe it's the establishment of a health savings account. Things like that could help you.
The other thing is being proactive for this year or 2022. You should say you may want to meet with a tax professional just to plan out is there anything that you can do this year that can help you the following year when you're looking at filing your taxes. And so I think that's great advice. What is the second key tip?
Second one is really to get a retirement income checkup. Now, this is going to have new meaning in 2022, Caleb. Many people who participate in 401k plans, this year they're going to start getting notifications from the plan administrators as to what income their assets will generate at age, I believe at age 67. That's the pro forma disclosure. So if you're planning for retirement, you got a retirement plan, you're working on things, you really have to focus on what income you're going to get from the assets you've accumulated. Now, if you go to the Caleb School and look at some of your videos, we know about going up the mountain and down the mountain.
Right.
And right. So you're working hard to go up the mountain to accumulate. Now
Right.
you're going to decumulate or go down the mountain. What income are those assets going to provide? So this year in the United States, over 600,000 401k plans and over 60 million participants are going to get their first income disclosures. My view is it's going to wake up a lot of people to, where do I get income? So I think for yourself, you need to, as you have your plan, an individual or a household has its plan on what its retirement plan is, what income they're looking to generate in retirement, the quality of the retirement, all the aspects of retirement that they're going to have, income, how they're going to manage their expenses, and so on. You got to keep on top of that.
This is something that's, I think, very new and big news for a lot of people, and I think it's very much going to be a wake up call because people might have a couple $100,000, maybe even $1 million in certain accounts, and it does not necessarily translate into the income that you think it's going to be. And so it will be very, very interesting to see what the pushback is. Do you think it's going to be buried in a bunch of, text, or do they have to put it on a very easy to read disclosure?
It's a uniform disclosure. I've seen some pro formas, they look easy to read. Now, will people read them and fully understand them? I hope that they take the time to do that. But you're so right. They need to have a conversation, because I hear from a lot of people, and you'll laugh at this, maybe you won't. Hey, Harry, I've got $100,000 and I'm going to be fine as I go into retirement. And then you need to, as you begin to have a conversation with someone, and let them know what that $100,000 converts to into income, either through withdrawals or through actual income from the principal, really gets people thinking.
Yep. I've always said that we should call it future cash flow planning or future income planning, and not this retirement planning, because I just feel like the word retirement doesn't highlight the actual activity very well. And I think if we compared cash flow, or if you compared income, people might look at careers, they might look at investments, they might make different decisions, because a nest egg, you can't necessarily spend a nest egg.
Totally agree. And after tax cash flow is the key. I think you and I have talked about this before. And for instance, I've used cash value life insurance to generate cash after or tax-free income for me, if you will, throughout my retirement as part of my plan. I described that to someone and they said, "What is that?" And so I've only been planning for this for 20 years. I've had it in place. It's it's there, but a lot of people don't understand these things. But you're so right. Yeah. Planning for that cash flow for the rest of your life. I kind of view it as income protection, even for seniors. I mean, it's like you need income protection throughout your entire life, even when you're working as well as when you're not working.
Absolutely. So I love that. Get a retirement income checkup, and essentially you can't be too young for this. Obviously, the older that you get and closer that you get to retirement is very, very important. But I would recommend, even if you're starting out, understand what each asset or retirement account, how that works, how that translates. Obviously, there's a good chance that things might change in the next 30 years. But I'm really glad that people are going to at least get a little bit their eyes open to what they've been putting their money to and how it's going to convert. So what is the third idea as it relates to intentional money matters?
Which is to, if possible, and if it fits for you, set up an IRA. Maybe it's a traditional IRA, maybe it's a Roth, but investigate the programs that the government has provided to allow you to accumulate funds on a tax advantage basis.
This is why I really appreciate having you on this, because the show, and having a series with you, because we can have maybe differing opinions and beliefs, but I am a big fan of saving money. And so if an IRA, if a Roth IRA, if a 401k, if those are plans designed to help you save more money, you are better off than spending the difference. And so one of the things that I think IRAs could help and 401ks could help is that proactive savings and investing. And I would 100% recommend you looking into options. And while we can't give investment advice, the Roth option, especially when you're looking at where taxes might be, would be an option that I would highly suggest you talk to your investment professional, and it might make sense as it relates to your financial situation. Anything else that you want to add on the IRAs? I mean, in the past, I've been very hard on these accounts because of the income side, but I also, the more I've experienced and had conversations with people, I've realized that the fact is we have a savings crisis, we have an investment crisis on our hands. Yep. And so I can get really cute in a corner, but at the end of the day, if people aren't investing and saving, we got way bigger issues.
I know. I think it's important. I mean, an example would be if you don't like if you don't like what an IRA will do, or maybe there are other options that are available, that's great. But you need to save to have the money to put it in the IRA or the other options. So it's the habit of savings. When you're doing your budget, here's what we're allotting for our small savings. You have to have that. And especially for your generation, Caleb, because fewer and fewer of you are going to have any sort of defined benefit pension plan. And I think that's what younger people, younger than 55s, are starting to really realize, wait a minute, I'm not getting any sort of pension from my employer like my older brother did or my cousin did. And as a result, people are looking for ways to accumulate more and income options. Where can they get that guaranteed option? So that's the 401k suggestion.
Yeah, and here's what I would say is, as it relates to options, every single person should look into a Roth IRA, an IRA, and have that be the benchmark. And so if you decide you want to invest in X, Y, or Z, really compare it to a Roth IRA and traditional IRA, compare it to a 401k with a match, and have that be the benchmark. Don't compare it to like a savings account or whole life insurance or an annuity. Like, I think an IRA, especially if you're in the accumulation stage, is the asset that you can compare to. And for many of America, they would be best off in an IRA. And so I'm glad that is an option. What is your fourth idea?
Number 4 is to ladder your savings accounts. Now, let's just say you've got money set aside in your emergency fund. That emergency fund's liquid. You've set it up to be able to get that money out very easily should something arise. Well, you may want to ladder that. And what laddering means is just investing it in different maturities and potentially being able to secure higher rates by locking some of it in longer. And let's say you've worked hard, you've got $40,000 in your emergency fund. Well, maybe you can put $10,000 of that into a CD that matures a year from now. Maybe you can put some in 2 years from now. Maybe it's some in 6 months, so that you can catch this likely wave of increasing interest rates that's going to happen in our country over the next few years.
Let me ask you this. When would it make sense to just keep money in like a money market because of the unknowns versus like, is there an age group? If someone under the age of 40 is listening to this, would you recommend them at all ladder their savings, or is this mainly for people that are nearing retirement, maybe in retirement, where they don't necessarily want to take a ton of risk? They're not going to really spend all their money. And so laddering savings options would essentially be a way to get a little bit better yield, keep your money safe. But I think it would be pretty foolish right now to lock in 5-10 years at these low interest rates.
I totally agree. But if you go and you set up an internet savings account, and we'll talk about that a little bit later, but if you set up an internet savings account through one of the internet banks, you look for different maturities, see if you can improve your yield somewhat. Yeah. Again, liquid money is liquid money.
Right.
And if anything, there's a growing school of thought, I think, Caleb, that older individuals may need to have a much larger emergency fund.
Yep.
And that account should be very liquid for them, because major illness, house repair, something like that, they may have very large bills and they need that cash available to cover them. So there's a different school of thought, I think, that's emerging there.
I think laddering and making sure that you have a couple irons in the fire, even in the safest assets out there, there's a ton of wisdom. And what I love about this series, by the way, is we're giving people just different ideas, And it's just one of those things where it's sharpening the saw. It's sharpening the saw. It's making people just get more dialed in as it relates to why they're doing what they're doing. And so I just, again, want to say thank you for just putting the time and energy into coming up with these ideas, because I know that everyone has opinions, but at the end of the day, there's something to say about someone who comes up with the ideas and can communicate. And so thank you for that. Number five.
Number 5 is get a general insurance checkup. And what general insurance is, be it your homeowners, your renter's insurance, your automobile. We've talked in our prior episode about having umbrella coverage. You need to make sure that that coverage is appropriate. And I'll give you one great example. If you look around the country right now, if you're a homeowner, your house has maybe increased 15, 20% in value. Are your coverages still correct? Now, in other parts of the country, do you have earthquake protection? Do you have flood protection? Do you have hurricane coverage? So these are all things you need to have. And once you get a good package of coverages in place, and it'll take you a little bit of time each year to make sure they're current, reasonably priced, and they deliver for you what you need. And sometimes things change. I'll give you a great example. When your kids begin to start driving, that's the wonderful thing of life. And you get that first shocking, auto insurance bill to cover them. I mean, things like what I do with my children is I had very high deductibles. I just elected the highest deductible I could, and actually proved to be a very good thing indeed. And also there are a variety of things to do, but again, it's something you manage. And the other thing too, Caleb, I think this is going to be more important in 22, because I think you're going to start seeing rate increases. We haven't seen, during the height of the pandemic, there were no claims because people weren't going anywhere. They weren't driving. Things were, a lot of things were, the overall claims cost for the insurance industry went down dramatically. That's changing. And I think you're going to see, I think I just read recently, probably 4 to 6% premium increases this year. So how you manage it and what you do is important, but make sure you take a look at it, have your coverage looked at in totality to make sure there are no missing areas where you're not covered, and that you're properly providing and paying the right rate.
If we see a 2 to 6% increase, do you think that will just eat into the savings rate that people are having? Because I don't see, at least I have never met someone who's proactively saving for their insurance. It's usually one of those things where it's just out of their lifestyle. How do you see that impacting America if we do see insurance hikes?
I see people, I think it could be food hikes. It could be a variety of things. I think people are going to save less.
Yep.
And I think they're going to keep it. They're going to try to keep their lifestyle, keep the way they do things on a regular basis. I think savings rates will go down, and that's problematic because, again, they need to save more for longer life expectancies. It's really a catch-22 right now, and that's why some of the things we talk about in terms of after-tax cash flows in retirement, being knowledgeable about your taxes, which is probably the largest expenditure your household will have. You're going to have to manage each of these items diligently to be able to maximize your cash flow and enable you to get where you want to be.
Yeah. 2 other things that I just want to mention. Many people resonated when we talked about inflation, how that is a direct attack on the lower and middle class. And it just comes into higher, insurance premiums, which are not necessarily I guess they relate a little bit with inflation because of house prices and all of that. But it just, at the end of the day, it's just more people are active now than 2 years ago or last year. And so we'll start seeing a difference there. And cars and houses are more expensive, and so it does make sense, and it's going to hurt the people that are living paycheck to paycheck way worse than the people that have excess savings, because you could make the argument that if you're invested in an IRA or invested in the market, with inflation, with the money continuing to print,
yes,
you're going to get the benefit of inflation. So it's just one of those things that I think we need to continue to share. The other thing that I want to say is my personal residence was 6 miles away from the Colorado fire.
Oh.
The greatest fire that Colorado, I believe, has ever seen as it relates to being destructive. And it was freaky. I was actually flying into Colorado that day, and we get a bunch of text, and I start seeing the map, and I had a moment. I had this moment where I'm like, oh no, our house could go catch on fire, and I'm sure I don't have it. I don't even have this whole thing properly insured, not necessarily from a homeowner's perspective, but all the items, all the equipment, and so it's one of those things where I almost had to eat crow. And I was one of those things where if I don't have my stuff figured out, pretty much every single person out there needs to get into a habit of making sure that your auto, your home, that everything's properly insured. It's just going to create a peace of mind. It's going to protect you and have that foundation, and it's really going to allow you to invest and build freer. So that's a personal update of something that really woke me up.
No, by the way, that's a great story, and that proves what I'm trying to come across with here. You need to do this. Yep. Once you do it, you have it in place. Maybe every couple of years you need to look at it, but just make sure you do a comprehensive review. Sit down with your agent or company, make sure your risks are properly covered, and including your contents, and make sure the contents of your home.
I love it. And last but not least, what is the final
number 6 on this session is change your money mindset. Yeah. And the reason I bring this one up is when it comes to money, you are what you think. You are what you think. And you really need to sit down and change how you think about money. An example is if you think about the fact that, hey, look, my family's always been in debt. I'll always be in debt. My family's never saved. I'll never do that. You need to change your mindset in a major way.
Yeah. I really appreciate that. And one of the biggest epiphanies that I had was reading Rich Dad, Poor Dad, and the different ways to frame, like saying, I can't afford something. You're literally telling yourself, I can't afford it. And it's just one of those really scarcity mindset type of statements, but shifting that to say, how can I afford that? How can I make that happen? How can I increase my retirement cash flow? How can I live X, Y, or Z? How can I live more intentionally? It acknowledges where you are, but it makes you have a mindset of like, okay, I'm going to be abundant. I'm going to start solving problems instead of just being the problem. And so it's just one of those things where I think mindset, and quite frankly, is rooted in almost everything that we do. If you don't have the proper mindset, you can do everything quote unquote right and still live a really poor life. Anything else that you want to add to that?
No, I quickly just to tell you that positive self-talk in this area is so important. Yep. And I think that the comments you've made, you can change your behavior. You can change how you approach money. You can say, I will save. I'm going to do a good job here. I'm not going to buy things impulsively. I'm going to plan for those long-term. You can do those things. And it's just a question of changing your behavior, but you can do it. And again, it just takes focus. And maybe if you got someone you're working with, your partner, maybe you've got a good friend who could work with you to help you get through some of these things, but you can do it.
So just to review, number 1 is prepare your 2022 tax filings and just really get everything dialed in as relates there. Get your retirement income checkup and essentially know what you're invested in and what cash flow and income that's going to translate to. Set up an IRA or look into an IRA options and make that be the benchmark. So if you can find better investment options, make sure that the risk assessment and if you can't, doing a Roth IRA or a traditional IRA is not a bad place to go. Ladder your savings. And this is just a way of like, hey, if you're going to save money, look at different options. We were at our current workshop and someone shared a credit union that they got like a pretty dang good interest rate. And so they shared that and then everyone was able to take advantage of that. It was just phenomenal. And I kind of fell over. I was like, I didn't know anyone would be paying that. And of course they had limits, but it was just one of those things where be on the lookout for liquid options, especially with the internet. Number 5 is get a general insurance checkup. Man, I hope this is not the last time we talk about this. Like every year, look at your options, make sure that you're properly protected, but also you might be overpaying for insurance that you don't need. So just make sure that you're working with someone that understands that. And last but not least, change your money mindset. Really make sure that you're asking the question, how can I make things happen, instead of just accepting that you are where you are and there's nothing that you can do. And so, Harry, I really appreciate you. I appreciate the intention that you show up in this series with. And I just love talking about this. It may be a shock to people. It's like I come in intentionally not studying these items because I know that I want to almost have a reaction like the audience has. And so I really appreciate you taking time to do this, and I look forward to next week.
All right. Very good. Thank you, Caleb. I enjoyed very much, and I'll see you at the next session.